All right, hey everybody, TG here. Let's get everything up and running, and we even got the camera going here. So hopefully, I'm having a good hair day. I don't know, we'll see. But yeah, so today is going to be one of these new things that we're going to be working on. It's going to be, in this case, let's break it down. We're going to be going over the multi-million dollar day that I had. I made $1 million in two accounts on the same day, so that was pretty incredible. A lot of people ask me how I trade multiple accounts. Well, to be honest, I kind of trade them all the same. It's just based on the size of the account. So if I take, 5% into a trade, well, it doesn't matter if it's a $500 account or a $5 million account. I'm putting 5% of that account into any particular trade or whatever trade I'm taking, or if it's 10% or something like that. That's how I get a lot of my accounts move the same way, and that's how I'm able to track, like 7 different accounts kind of at the same time, and it doesn't confuse me because they all pretty much have the same names, they all pretty much have the same allocation. So anytime I make an action, I just have to do that same action in each account. So it really kind of cuts down on a lot of the work there. For anybody who is watching this on Facebook or YouTube, welcome. Feel free to say hi. We're not going to be doing so much about, okay, live in the markets and what are we seeing and what are we doing and let's go study this. This is going to be more of a kind of a conversation showing you guys some just experiences that I've had as a trader, doing this full time, living in it, and showing you how did I get into some of these trades that went really, really well. And then, of course, some of the mistakes, some of the mistakes I made. I was talking about these mistakes in the class that I had a couple weekends ago, and people really appreciated the fact that I was talking about mistakes because we all make mistakes, even as good as I am and as much as I can read the market. I'm still human, or I still kind of see something, or maybe I'm a little stubborn, or maybe I didn't act fast enough. And it's good to go back and look through some of these things and say, what did I do wrong? How could I have done better? And what do I need to do going forward so I don't step on that rake again, or step on that landmine or grenade? And so we'll go and talk through some of those because I still learn every day. There are still moves that when I'm looking at the market, I'm like, oh, I see that. And now I can apply that to this next something. And so this is how I am constantly looking through it because no matter how long we've been in the market and we kind of see these patterns and they do repeat, that's how I'm able to teach and that's how I'm able to have these consistent setups and actually have rules. They all come in different forms. One of the ways that I explain it is, we're all familiar with a box, like, right? Amazon ships us a box of stuff, but isn't every box different? Every package we receive is a little bit different, but we're intelligent enough that we can recognize that it's still a box no matter what shape or color or size it is. And that's kind of the nuance of the market. That, for example, we just kind of look right here. You see that? It's a double bottom. But sometimes it comes into different form. Is it a true double bottom? What if it shows up on the hourly chart? What if it shows up on the 5 minute? What if it's a double bottom that works for a while and then fails? Let's kind of see if I can slide this over here and show you this. So you can see here, essentially, here's another double bottom that worked for a while and then we rolled over. So it's this kind of stuff that we have to really take into account and put it all together and do it basically live when we don't know what's coming next. But if you see these patterns enough over and over and over, you will then be familiar with them enough and learn them enough that you can actually kind of envision what is to come next. And that is how, when I teach and when I show these patterns, I can show you the other half of what I'm expecting, even though I don't exactly know how it's going to unfold. And I think that's really powerful, and it seems to me that a lot of people have really resonated with that. So what I wanted to do is let's first dive into the overall market condition of how I made those $1 million in a day. And it was a very strange kind of day. It was actually, let me kind of zoom in on here for you guys, kind of back it up right through here. Let's see, it was this day, so February 10th, if I remember correctly. And we had a really pretty big bounce. We had all that GameStop squeeze and, they had to bring the market down in order to stop all that. There was a whole lot of stuff going on. And it was almost like it was an artificial pullback. And a lot of currents were going on underneath the surface. And when all this stuff was starting to get pulled back because institutions were kind of losing their shirts, losing their shorts because they were getting squeezed out of them. They had to go sell off their good positions in order to have enough capital in order to save themselves over here. And so I think we saw a lot of quality names just start getting hammered, and that brought the market down. And then once that whole GameStop squeeze and a lot of other squeezes were over for the time being, then they could take that money and go put it back into the good names, and that's where we saw the market spring up. And then just one other thing I remembered, I wanted to make sure that you guys knew that at the end of this, we're going to be doing this for 30, 45 minutes, kind of talking through this. At the end, I will then answer some questions, and we'll see if there's anything I can do for you as far as anything that I had shown. I do see that you guys are in the chat, so if anybody's there, ask a question while I'm going through this, and if I can answer it, I'll be more than happy to. So it was this day right here where we opened up with a gap. We actually opened with a gap up, and I'm always uncomfortable when the market opens with a gap up because it's just not supported. The issue is that at some point price is going to have to find that support, which I generally look at as moving averages, and so I'm always a little distrustful of that. And in fact, this move right in through here was moving in such a way, and it had been such a long time since we had actually touched the hourly 50 or any other supports, even on the 15. I was actually kind of looking for price to pull back, and we were going to get liquidation breaks or something, and I was kind of expecting some weak market action. I was expecting price to pull back at some point. So when we got that gap up, I was like, uh-oh, this might be it. And sure enough, if I zoom in closely here, you can see that now we can see each day, here was the gap up, and we got a huge liquidation break that day, like right there that morning. So in the accounts that I made $1 million in, I actually opened up that morning with, I don't know, maybe $500,000 or $600,000 of gain, total account, because I had several positions on. I was like, all right, this is pretty good. I like this. Let's see how long it lasts. And then we got that liquidation break, and it just ripped everything down. And my profit went from like $500,000 to zero. Now, I wasn't losing money, but I gave back all of the gains that I had at that morning within about an hour, because you look at that, and that happened right away. And I was like, okay, well, we're not negative yet, so that's fine. I kind of looked through my names. I said, well, everything seems okay. And this happened so fast and so quickly that I could tell that this was basically a liquidation break. And so I didn't sell anything, and we really didn't make any moves, and I knew there'd be a bounce of some sort, and so I could see what was happening. We oversold straight down, kind of artificial, and then we bounce, and then we actually start holding, and I could see the account gains start to come back, and I was like, okay, maybe the worst is over. And I think I had made back maybe 350 or 400,000 of gains at that point, maybe about, I don't know, around here. And then I actually went, because it's the middle of the day, I don't really trade during the middle of the day. I actually went out into the living room to go I was at my parents' house, and yeah, so, I'm trading over at my parents' house. And so I was out there talking to my sister and brother-in-law and my parents, and, we had some family conversation about some other stuff, and, who knows what. And so after maybe an hour and a half or 2 hours of kind of out there talking, having breakfast or a snack, I was kind of getting a little antsy. I knew I needed to come back. The market was getting close to where I need to go check on it. And so I came back, and the market had moved up, and I was floored, honestly. I was surprised because I figured, okay, maybe I'll make back what I had this morning. And I looked at the accounts, and they were no joke. I mean, green, it said $1 million profit, that gain that day. And I was like, holy cow. And I actually looked through the other accounts. They were all doing solidly. You guys have seen the webinar and the documentation of that. And then there was another account that made $1 million. I'm like, are you kidding me? And then my brother-in-law came in, and I showed him what was going on. I was like, okay. And so then I said, where is this coming from? On a day that we just got a liquidation break and then a big pop up, where is this coming from? So this was February 10th. So if you guys ever want to look through and correlate this to anything else you were seeing, one of the big names that I was having a good time in was SNDL. And so this is a cannabis-related stock. Let's see. So yeah, the 10th was right here. And you can see, let's kind of zoom in on this for just that particular day. You can see that we opened with a nice gap up. And I had a fairly large position in this one. So we had a nice gap up, and then we get that liquidation break. And so it actually, went negative from where it opened. But I looked at this and I said, everything still looks fine. Like let's give this a little bit more time and see what it does. And sure enough, price just bounced off of the 15-minute 200. You could see the Moxie indicator was looking great. And then as this thing kept moving up, it just up and up and up and up. And this was a big driver of what I was trading that day. And so that was fantastic. Now, if you look here at the hourly chart, kind of zoom in on this, and maybe let's see if I can get the day. There we go. The dotted lines help differentiate each day, so you know which day I'm talking about. That was a good day right there. And you can see we'd really started kind of going vertical. And even on the daily chart, let me kind of zoom in on this one. The daily chart, you could see it was this day right there. When the market jumps up like that, or a particular name jumps up like that and starts to pull away from the moving averages or gets outside of the 30 ATR or something that's just, you're like, this is too good. Like I always get nervous when I have a really good day in the market. I almost get nervous because I kind of have to look around and say, well, how long is this going to last? Because when things are too good, they tend to pull back, right? And so I looked at this and kind of took inventory of the names, and we did actually. We sold a quarter of the position right there at the end of the day, and the next day it jumped up even further. So you're like, cool. I'm glad I only sold a quarter. All that kind of stuff. But then, and this is what I'm saying, you always get a little nervous when things jump up almost too well, because then you can see that's when it jumped up. Like this is a pretty common thing for names that just go too high, and I'll show you a couple other names that I have in mind. And then it started to roll over. Now, I wasn't quite able to tell that the market itself was starting to really wear out. I mean, things still looked okay, but it was everything underneath the surface actually started to fall apart. And SNDL, cannabis, the EV names, all this kind of stuff were names that were starting to fall apart before the market really started to fall apart. So one of the lessons, so one of the benefits was, okay, we were in this name, and we were in this name from back here. There's the Moxie price trigger. We'd been following this name for a while. There was big volume that came in. It just bounced off support on the daily chart. I mean, everything lined up. So that's why we took this trade. And the percentage gain was, from here to about there, 278%, in the course of 12 days. And then that particular day, let's see, from the day before, it jumped up 47% and then came back down to 15%. And then we closed some of it at 75%. And this is in a day. Like this is one day. So this is where a lot of that came from as far as that particular gain. And so we took some off, and, it jumped up the next day. So we're like, okay, is this going to hold or not? And it didn't hold. And at that point, I probably could have done better about taking a little bit more off and cashing in, because part of one of my rules is, the names do really well as long as they are generally following the 15-minute 50. And you can see right here that the next day, price actually fell off of the 15-minute 50. So I should have taken more off that day. And then the next day, I did actually take a little bit more off here, because what I could see was that price was doing an inverse trampoline move on the 15-minute time frame. So then anybody who's kind of paid attention to me and how I trade, and anybody who's taken class and all that kind of stuff, you guys know exactly what this is and just how important it is. Price should not be over the 50 if the Moxie indicator is below 0. So I was able to take some more off and kind of look at that. And then we had our stop just below that, because I didn't want price to I didn't want to give any more back on that. And then you could see price just kept going down, down, down. So we finally got out of this thing, because it's like, all right, this isn't working. And it looks like a lot of other things are not working. So we just got out, stepped aside, still pocketed a lot of profit and percentage on these things. And then basically the next thing that started happening with the whole rest of the market is all of our good positions. I mean, no joke. And I have no shame in saying this and no embarrassment. I was getting stopped out left and right during this time. And that's important, because that's why we use stops. We have all this stuff trying to ride it up. And you know what? When the market changes and it hits your stop and you get out, you're suddenly in cash. And you look around, you're like, wow, all of my positions suddenly got stopped out and I'm in cash. Yeah, I gave back some money, but at least I pocketed that money, because we all know what just happened over the last 2.5 weeks. The market pulled back, and a lot of these names just crunched, just absolutely went straight down. So I'm thrilled that we got stopped out. One of the other names that was helping was OGI. Look at this thing. This was a nice little base here on the daily and hourly. Once again, everything was looking perfect in through here, just kind of nice. Started pop, pop. And I think, let's see, this one was, at the max where we sold it was 225%. So that was another really good day. And this one, I was better about this one because, as I said, you kind of learn lessons about, okay, how aggressive do I need to be with some of these things? Because the more they go up, the more vertical they go up, the like more exciting they are, the more like, oh my God, this is amazing, the more scared you should actually be and start taking some stuff off. And so I nailed this one. We took our last piece off right at the top, and then it imploded after that. So that one was a very good one. And that's kind of where you take your things and you learn from all this stuff. So then some of the other ones, let me talk about a couple other mistakes that I had, and then I'll show you another one of the big winners that I had and how we traded it. So HTOO was another one of it's hydrogen, alternative fuel, and they were looking pretty good and looked like this was kind of the hot trend for the time. And sometimes you have a hard time trying to really see what's going on. I should have seen this. I should have definitely been better about seeing that maybe I was either jumping the gun and kept a tighter stop, or just seeing, hey, you know what, this isn't working, let's get out. The first entry was perfect. The first entry was right here. It followed all of my rules, came down, tested the hourly 50, all that kind of stuff. And then right here on the 15, pop, pop, pop. That one was really good. And then I was thinking, okay, this thing's going to be pretty good. So I'm really looking for another place to add, because we didn't take a huge position. I was like, I want to add more to this because I think this thing's going to go someplace. And so I looked through this. Okay, price came down. Started tapping some support on the daily, and the hourly was looking okay, but you can't go in. You have to look for your rules. And the rule that I got was, here's your double bottom, okay? And then on the 15th, there's the double bottom right there, and there's the positive divergence. And then we see the next day that price popped up, and it looked like it was on volume. And so I thought, great, this is the start of the next move. And I said, okay, right here, if price can stay over the 15-minute 50 and start carrying it through, then that's good. And what that should do, if I zoom in here on the hourly, is what that should do is then we'll see price here, and it'll kind of go sideways, and then it'll bring the hourly 50 with it like that, and then everything will be great. Well, what happened was it actually went straight down the next day, which I should have been more aware of. Like a lot of times, if you're in a good trade, if you're in the right trade, and if you're right about something, then the market, the position should pretty much appreciate. Like you should be right on time about when this thing wants to go. So the fact that it went straight down should have been a little bit more of a warning to me just from a price action standpoint. And I didn't pay enough attention to it. Again, I kind of thought, well, we're just kind of going to get into this thing and kind of just let it move around for a little bit, and it'll appreciate in time. So that was kind of mistake number one. And then mistake number two is straight up, it was one of my rules. I broke one of my rules, and it was here on the hourly chart. Notice that price was, let me change that color. Notice that price was trying to move up across a downtrending hourly 50. And the hourly 50 is the magenta colored line. And, I was kind of thinking, okay, I mean, I see it, but what I'm expecting is price to kind of hold like this, and it'll bring the 50 with it. Well, it never happened. And actually, you look here, the Moxie indicator stayed below zero. It was close. It was close to going positive, but it wasn't. So this was two of my rules. Number one, it was an inverse trampoline move, just like I showed you on SNDL. Price should not be over the 50 if the indicator is below zero. And two, you don't want to be trading up or long against a downtrending moving average. You want the moving averages to be working with you. You want them to act as support. And you want them to be like the yellow brick road, the price, walks up along. And none of that happened. So I should have set my stop tighter. I probably should have never actually gotten into it in the first place because it just wasn't working the way that I wanted to and fulfilling my rules. But I was a little antsy to get into this thing because, the rest of the market was really going. I thought this was going to be another big winner. So, of course, I want to show some good numbers. And it just didn't work out. And what happened was this thing just kind of kept melting down. I had my stop. Let me kind of readjust everything here. Okay. Where did we go here? I guess I don't have enough time on that one. So I put my stop under here because I kept seeing that price would come down and then bop a little bit and then down and then bump a little bit. And then I tried moving it just a little bit, and I thought it was going to work. And it finally did bump, but we were already out at that point. And I could have saved Could have saved some money, could have saved some percentages on that one. You'd also see here was the same situation. There's an inverse trampoline move. Price is below or above the hourly 50. The Moxie indicator is below 0. That is the same condition. This and this are the same conditions. So clearly I saw one of them and didn't do anything, didn't go in on it. The other one I didn't quite do it. And I just held on to this one for too long. So well, Tungsten, I think you're here to listen to me, so if you don't want me to be talking, then maybe you shouldn't be here. Anyway, so that was one of the mistakes that I had, and then I took that and we looked at VVPR, and I said, all right, let's take that lesson from HTOO and make sure I don't repeat it. And when I was looking at VVPR, I noticed this right here. Price looked like it wanted to go. It was following the 15-minute 50. The Moxie indicator was looking good, all this kind of stuff. So everything was looking pretty good, but it was the same thing as at HTO. I was aware of it. Look, price was trying to go up across a downtrending hourly 50, and the Moxie indicator was still below 0. The same situation that HTOO had, and I saw it before, and I was like, oh, okay, here it is. Don't want to do it. Don't want to be taking this trade. And sure enough, we did not get into it. And look, I mean, very next day, price came down. So I was like, okay, good. I got this. This is looking pretty good. And, we saved ourselves. Then what I was looking at is here's the double bottom. Saw price, the Moxie indicator come up. We saw the Moxie indicator come up again. It looked really good. Held the 15-minute 50. And this time, if we zoom in a little bit, I thought that this now was what I was looking for. I wanted to see price come back down into the hourly 50, wanted to see the hourly 50 level out and become support, and then see price come up. So I applied that, and sure enough, we went in here, and that was a good trade for the time being. So applied one lesson, that worked out well. Then the other mistake, this one had a few mistakes, but the other mistake with this one was, yeah, I had a little bit bigger of a stop, not too bad, but I could have recognized when to get out sooner. And we can see here on the 15 and on the hourly that we got in here and it started to get trapped and stuck underneath the 15-minute 50, and the Moxie indicator was just falling apart. And you could see here it just kept following the 15-minute 50 down. And I should have just looked at that and said, look, this thing is clearly not working. It's going to take a lot of time in order to turn around. And it's just not doing what I want it to do. Like it's not even over these lower moving averages. It's not even over the hourly moving average. And again, I kind of just had this bigger idea thinking, well, maybe this is just going to work because the whole sector is going to work. Then that's not true. You need to look at each chart, and if it's not working, just get out of it. And so I could have been more proactive about getting out of this one sooner. Basically right there, could have gotten out basically break even or a small loss and saved ourselves from a full stop out loss. Now that's grand scheme of things, it's actually okay because look where this thing went. We got stopped out here and it kept going down. It ultimately went down 37%. So in the grand scheme of things, when we got in and got stopped out with, call it 14%, which is a larger size of, stop outs. I don't like to have them that big. At least, we didn't ride down a 40-something% loss. So that one was pretty good too. All right, let me see if anything you guys are talking about. Yeah, we'll get to some of this stuff a little bit later because, we'll have a question and answer session in a moment. And then with that, let's see, Overstock. We actually did take a trade on this one. Here was another trade that I just want to show you back in the day. And this was, slightly embarrassing because we have, for Simpler, we have the trade of the week, or had to. We changed it up a little bit, but trade of the week. And so I said, hey, I think I have a really good trade, and I think I see it, and let me go make this not only public in my channel, let's go make this public across Simpler. So, a lot of eyeballs on this thing and a lot of people looking at you. And I was like, yeah, this thing's going to be a great trade. And I could see something coming. Ultimately, I was correct, but boy, my timing was off because I jumped the gun. And what we could see here, if we look on the hourly, I could see here that price was coming back down to the hourly 50. And a lot of times price bounces at the hourly 50. No guarantees, but a lot of times it does. And I was looking for price to finally, get out from underneath the daily 50. And so I jumped the gun and said, I think it's going to bounce here. Let's go. And my mistake was I did not follow my rules. One of my rules is that in order to take a bounce or a support at, say, the hourly 50, I have to have the next time frame actually hold up and prove that it wants to go long. And you can see here on the 15-minute time frame that price was running right into the underside of a downtrending 15-minute 50. So that was the rule I violated. Price had not demonstrated nor proved itself that it wanted to actually go up on this lower time frame. Therefore, price was going to continue to fall down below the hourly 50. That should have been an easy thing. Now, this one I did have a stop, got stopped out, fine, okay, didn't get damaged further, but I should have never made that trade in the first place. And not only was it something I shouldn't have done, I did it in a big way with everybody watching. So that, yeah, had to kind of lick my wounds from that one a little bit. But if we then take that and say, all right, I still saw that there was something coming. And if we look here a little bit over, kind of move this one over too, I kept talking to everybody because I think there's something here, and I just want to try and save face a little bit, right? And I said, all right, here's the pattern that I'm familiar with. This is where price crosses the 50, gets rejected by the 200, and then comes down and tests the 50. I know that pattern. And I guided everyone into this. This one we actually did start taking. We took this trade, and we took this trade, and ultimately Overstock really did work out, and I did see the thing. So my point is to kind of summarize what's going on with these mistakes is, one, have your rules and make sure you stick to those rules. If you don't have rules, come subscribe to somebody like me. You can follow the rules that I have. They work as long as you follow them. And if you have rules, you built those rules for a reason. There is a reason that you've constructed them. They mean something to you, and you found that more often than not, they work. And you just have to, nobody's telling you what to do. I mean, I could go into something all day long, or I can go short, I can go long. Like, nobody's telling me what to do. I have to stick to my own rules, and that really comes down to the self-discipline of saying, yes, I'm seeing something here, but did it fulfill it on this other side? And it didn't. Even though I think it will, or it looks like it's going to, it did not. And that is the thing that we really have to stick with and say, it didn't do it. So until it actually triggers, until it actually confirms, you still have to wait. And that has been a huge component, even the last 2 weeks, because the market's been melting down. You just sit on your hands. I know it's really difficult. People are paying money to listen to us and to subscribe and to take trades and do all this stuff. And they're probably thinking, you haven't done anything for 2 weeks. But that's the whole point. Look at the market. Look, like even Overstock. This was brutal. Look at this move. It went down 41% over the last 2 weeks. For me, as a long trader, there were no trades to take until today. So that's kind of the stuff that I'm talking about, is you just have to be patient until you can see your setup, see your rules, and listen to them. You have them for a reason. Let's see. Yeah, Sean, that's right. Yeah, made up for Overstock with SNDL and OGI. That's the other thing, is like, okay, sometimes you shoot yourself in the foot with a bad trade, but we do have ratios. Like we make more money than we lose. We have more good trades than bad trades, and sometimes that's just going to be the way of the market. Even if you have a really, really good setup that works, it's up to the market after that if it actually holds up or not. Breeze, I use hard stops. I know that maybe sometimes options don't and all that kind of stuff, but you put exit orders in there in case they go that far. If you aren't going to use a hard stop, you need to know what your stop is before you get in, and you need to absolutely abide by that. One of the biggest mistakes that newbies make, and trust me, I've made it too, and sometimes I still make it, but you say, okay, I'm going to draw a line, and if we get in and then it doesn't go our way and starts going against us and it hits that line where we said we're going to get out, if that happens, you need to get out. Because the newbie in us will be like, well, maybe if I need to just give it a little bit more time, or it's kind of working out, or maybe it's just going to take a dip and then it'll come back, and the next thing you know, the thing has run away from you to the downside, and you are losing a lot of money, and you can't think about anything else, and your brain is clouded, and now you wish you were never in this, and you're like, oh man, if only I'd gotten out when I should have, then I wouldn't be in this pickle. So please learn from my mistakes, and please let me tell you that from somebody who has been through this, and every day we need to remember this. If you set a stop, and if it's not a hard stop, if it's not like an automatic stop that you've already put into your trading platform, You need to abide by it, and you need to get out when it hits it. Just no ifs and or buts. Just get out, follow that rule. Yeah, Gwen, that was the other one. Can was the other one that I was going to take. Let me go over there. Now let me just kind of hide this and pause for a moment. I just got LASIK the other day, and my eyes are still getting pretty dry, so let me just kind of put some drops in. I'll be right back. All right, so working with that. I get these contacts out on Thursday, so that'll be nice. It'll kind of help a little bit. So, yeah, Gwen, you nailed it. That was the other one I was going to say. So, big wins and lessons learned. We went over about 3 stocks that we got the lessons learned, and then we went over 1 or 2 stocks that we had big wins, and Can was a big win. This thing was amazing, and it is related to Bitcoin. It's kind of a Bitcoin miner. And I saw this thing a while ago. We've actually taken a few trades on it, and then it pulled back. And, I was like, okay, it's not working out. Let's get out. And then we had to kind of keep waiting. And sometimes you have to take a trade or two in order to get this right. And Can was kind of one of those situations. I was trying to figure out right through here if we could hang on to the trade and let it go up. And it kind of tried. But then right here you can see it did that inverse trampoline move thing, and it was trying to go up across a downtrending moving average, and so it didn't work. And it's like, okay, well, I guess that didn't work, but you got to keep an eye on it because I still saw something. I was like, this thing's going to work at some point. I just have to figure out how to get back into this thing correctly. And just understand, this is how the market's messy. Like, trading is messy. You're going into battle against computers and other traders, and it's ruthless out there. So just understand, be cool with yourself, that if things don't really go the way you want it to, or it's, moves up, moves down, you get stopped out. It's just, sometimes it takes a while. But as long as you keep your losses limited, a lot of times when these things work, you'll more than make up stuff, and then you can actually size up when it does start to work. So, and the interesting thing is, like, don't also have, if you really think you're seeing something and it follows your rules, don't have any qualms about, okay, I just got stopped out, and then going right back in the next day. That's exactly what happened with us with Can. We got, like, here was my stop. We got stopped out here. Let me see what day this was. That was on January 27th. And then I went in the very next day because it set up. It looked good. It went straight down, kind of like a liquidation break, kind of like what I was talking about with the market. And then the next day, it popped right back up and on volume. And I was like, oh, guys, all right, we got to get into this thing. I know I'm trying this, and we're really trying to figure this thing out. Let's go. And then, it pops up the next day after that. So we're like, yeah, this thing's great. And then it comes all the way back down below our entry. It doesn't hit our stop, but below our entry. And you're just thinking, this thing is neurotic. I hope I'm right. What's going on with this? And I just kind of kept staying in it because it wasn't too bad, and it was kind of doing what I wanted to do, and some other stuff was looking great. And then the next thing you know, this thing started to, let me show you this, just started to lift and lift and lift and lift. And this one was just magnificent. Like, even on the 15-minute time frame, look how good this thing was. It just kept following the 15-minute 50. Like, it doesn't get any cleaner than that. And that one was fantastic. So let me kind of zoom out and see what that was. It was like, somewhere around here. And ultimately, I even actually got out early. It was 220%, and I got out early on that one. Let's see. Ultimately, I probably would have gotten out here for 327%, so I guess I left 100% on the table on that one. But you know what? Can't be too mad at 220%. And then once I was out, I'm okay with it, because look what happened. And this is where I was getting a lot of people talking about, like, Can. Like, oh, look at this thing. It's going up again. I said, nope. This does not look good. Again, just like SNDL, like OGI, like AYRO, like IDEX, when these things start going too vertical and too far, too good, it's a problem. It's outrunning all of its support. So even though I left some on the table and I saw this move, I did not get back in. And you can see it was a good thing, because look what happened just shortly after that. It went right back down. And I have still yet to get back into Can, because it still has not done anything yet. Like, this isn't doing anything yet. So this is how you kind of take some of your past experiences and say, nope, I've seen that before, and I'm not going to get in. Even like this one. Let me kind of zoom in on this one. This move, right from here to here. I had people in the chat and in my Moxie trading room and stuff like, cans moving. Like, wow, look at that thing, it's really going. And sure enough, yeah, popped from here and went here 57%, and even in the one day it went 20%. Yeah, okay, it's moving, but it didn't follow any of my rules. And since I'm an end of day trader, I'm not a day trader, even though I can teach people how to day trade. In fact, we did something like that today on the S&P, and it worked. Uh, I just didn't see anything that I wanted to trade. It didn't make sense that CAN, which is Bitcoin related, is going up when the rest of Bitcoin and Bitcoin related names were not going up and were not doing well. So clearly it should not have been doing what it was doing. And the other thing is my rule, look how far away price was from the hourly 50. So I said, look, in order for me to get into this thing, I at least want to see it come back down to the hourly 50, which it did. And then it kept going because it never followed the rules again to get in. So that is how you stick to your rules. Sometimes it's really difficult because of FOMO, and you're watching these things move and go without you, and you know that means money, and you're like, I could be making money right now, but there's always another train coming, and as long as you just kind of hang out and watch this kind of stuff, stick to your rules, then you just find the right opportunities and it'll work. So yeah, Gwen, thanks for that one as a reminder. Yeah, and Gwen, yep, learning not setting stops is painful. I'm telling you, guys, whether it's a hard stop or a mental stop, follow the stop. Usually your first loss is your best loss. Okay, just get out. It's not working. Don't deal with it. Keep your mind clear, and then just wait for the next trade. Breeze, so most of my trades I take based on the hourly chart. So my center chart is the hourly, the daily is kind of the strength, and then the 15 is like the exact precise detail of where I might be getting in on something. But I really like to anchor my trades based on the hourly chart. Right now, since the market has pulled back so much, we're just starting to see things setting up. We're starting to see some of the first moves setting up on a 15-minute time frame. So as I always tell people, is if you're going to take a trade based on a 15-minute time frame and the hourly is not ready, then you need to understand the context of that trade is based on a 15-minute time frame, and don't expect this thing to go forever. You need to expect that this is probably just going to be a 15-minute time frame trade, and you have to kind of keep looking at the other stuff. Bevan, how do I scan for potential candidates? Well, one, I like to do the abnormal volume scan. That kind of tells me where the money's going or where the interest is going, because volume is interest, sometimes up or down. So make sure you find the right candidate. And then the other two scans that I really like are part of the Moxie system. I have a Moxie price trigger and I have a Moxie trampoline scan, and I love those because those are how I trade. And so I built scans to find the things that I trade for. Other than that, I actually just look through my watch list every day. I have a big watch list that is very diverse, and by looking through it, I can get a feel for what's going on with the market. And actually it's very cathartic going through just a general list every day that I'm familiar with. It's like my old friends. I get to look at my old friends and hang out with them each day, and I get to see, oh, how you guys doing today? And by the time I go through everything, I'm like, I got a feel for what's going on. Oh, you guys still melting down? Okay, not good. Oh, okay. Some of you guys are trying to bottom and turn leg. Okay, things are happening. Oh, okay, you're starting to look good, and you're starting to look good, and the market's kind of starting to shape up. Like, oh, okay, I'm getting a feel for this. So it's very cathartic and entertaining, actually, but educational to go through a consistent list of names every day and just watch them. Just watch these names, see how they move. Every once in a while you'll add a couple names. Every once in a while you'll take some names away because they don't do anything, or just like, yeah, I don't need to watch that. And just get a feel. You just have to kind of watch these things and get a feel for them. Oh, Gwen. Yeah, nice. So waste management. Yeah, we were talking about this, the live session. I forget when. Yeah, I do think this is too vertical. So I know you're in this. And when I was saying that the risk is that price is eventually going to come back down to the hourly 50 because this is the first move against the daily 50, yeah, this is absolutely going to come back down. So this has gone much further than I thought it was going to since the last time we spoke. But look at this. Look how beautiful this has been. It's following the 15-minute 50. Great. But what's the risk? The risk is you are way outside of 30 ATR and very far away from the hourly 50. And look at you. You are in no man's land when it comes onto the daily chart. So yeah, I'm glad you actually kind of brought this thing back up and said that. So this thing has been much better than I expected. I believe you're in it, and I'd be getting out of this thing. I'd say this was a great trade. just take your money. Just, pat yourself on the back, take your money. Like you can set a stop for the remainder of it if you want, just in case it keeps going. But man, that is a really good trade, and I've taught you guys what to expect and how to look at this stuff. And I'm telling you, there's risk on that daily chart and there's risk on that hourly chart. So make sure you capture your money on that stuff. Yeah, Tommy, angle of attack, that one too. However, Tommy, look at the angle of attack on the daily 50. It's not there. And this is why I'm saying this was a really good trade on the hourly and 15, but now we have to factor in the daily and say, this is not a good angle of attack, and at some point the daily is going to want to do what the hourly did, which means that that you're going to have price come back down to the moving average, just like you're going to have price come back down to the moving average on that one. So, yep. Gwen, good. I'm glad I'm helping you guys out in that case. Bevan, no, I don't mainly trade tickers below $25. I probably mainly trade tickers below $125, but we just put a trade on a $300 stock today. So no, I don't have any issues with price. I care mostly about what is the setup and how much percent does the thing move. Because, if I trade a $10 stock and it only moves a couple percent or has the range, I'm not going to trade it. But if I can trade a $500 stock that, as long as it's got good percent movement, I'm happy to trade it. So yeah, it doesn't really have anything to do with price. All right, let me kind of take a look since you guys have been asking some things. Lucy, as far as anything with the script or the Moxie system, please talk to our customer support. We've got great people over there who know everything about Moxie and the tools, so reach out to them. Duncan, somebody like that will be able to help you. This isn't really the place to be doing that. Well, let's see. Jonathan, using Overstock, would I factor it for your decision? Well, yeah, no, I'm not going to be factoring in the weekly or the monthly because I do think actually the weekly and monthly for Overstock looks pretty good. So right now my decision is kind of like it's really oversold on the daily. The hourly is starting to show bottoming signs, and then the 15 actually started to hold moving averages. So that's why I decided to take that trade on that one. All right, so let's see. That was the big wins and lessons learned. We went through about 40 minutes worth of that, so you guys got all kind of information. I'm going to take some general questions. I'm not going to be diving into what do we think of the current market, all this stuff. Like, we're trying to keep a certain theme here, and so I don't know, maybe general questions of like, hey, what'd you learn from this, or what do we need to know for that, or how did you get a big win? So let's see if we can kind of keep some questions that direction. We'll see where we go, and then I'll sign off in another few minutes after this stuff. Some interesting comments from you guys. Steven, so do I maintain the watch list on Thinkorswim or another source? And I have it on Thinkorswim. Yeah, I run through my Thinkorswim watch list, ones that I've built. You can build your own. They can get quite long. As I said, I have my one main one, which probably has 300 names, but I'm quick. I can go through it. In fact, I can go through my entire watch list in probably 40 minutes. And build kind of a list of names of things I want to look at, and then once I do that, I can actually go back and start kind of cherry picking which ones I actually liked. Like, you just have to keep kind of narrowing the list down until you find something that you really like. And hey, maybe you don't find anything. There are certain times of the market and days where there's just nothing to do and nothing's really looking good. So Amber, so the EMA 50 in the hourly is different than the 15-minute, 2-hour, whatever. So I use the 50 SMA, and I use that on all time frames. So the 15-minute uses the 50 SMA on the 15-minute time frame. The hourly uses the 50 SMA on the hourly and the daily and so forth like that. Marco, yeah, I actually had somebody ask me that question, the magic of multiple time frames in your courses. I'm not sure exactly where that's coming from, but I've written about that, and I think that's what you're talking about. I think we are including that in some things, but other than that, I do talk about multiple time frames in all of my trading. In all of my classes, everything I teach, I'm always talking about multiple time frames. And so really anything that you guys get from me, any kind of literature or newsletters or education or live events like this, I'm always talking about multiple time frames. Greg, nope. Simpler is my only trading source. So they are the company that I'm with. I like them. They love them a lot. I'm very, very happy with them. So no, the only way that you guys can get access to me is through Simpler or through my own personal, well, my own branding website, profit-pilot.com. So profitpilot.com. Uh, Donald, no, we haven't done anything with those trades. Yes, we did have some issues with the classroom, so log out and log back into the classroom, and that should fix it. If it doesn't, then reach out to our customer support because we did have some issues with that classroom, and we want to make sure you guys are in it. So no, we're still in those two positions and just kind of waiting for them to take off. That's basically it. The market has just finished. I believe the market has just finished stop going down, like just finished pulling back, and I'm starting to just barely see some names starting to warm up out there. And so we just have to kind of just wait for everything else to get into gear and actually start moving up if it's going to be moving up. So a little bit more patience with the market. I think this week will be a good buying week, but I want to make sure that everything's right. I don't want to jump the gun too early, like I've kind of talked about in some of these lessons, and I think that's where it is. Yeah, Will, I totally consider myself a swing trader. I'm not an investor to where I kind of just buy something and I think it's going to appreciate and just say, oh, I'm just going to buy this and hold it for months or years. And I'm not a day trader because I don't want to be in and out during the day and I don't want to trade in the middle of the day or anything like that. I have a routine. I buy at the end of the day and then I want the position to go for several days and just wherever it's going to go. So yeah, definitely a swing trader. All right, let's see. Vareg, no, I don't use the MACD. Really, what you guys see on my screen is what I use. I use moving averages. I use Moxie. I have the squeeze there. It's nice to kind of know that it's there. And then I use the slow stochastic. And the slow stochastic I only use to help pinpoint bottoms. I don't use it for the top side at all. So I only use it in one direction. And Jason, no, the Squeeze Pro was not included in the class. But yeah, you can get the Squeeze, you can get the Squeeze Pro, but no, Moxie is the one that you buy with the class. uh, oh, hey, Rebecca, good to see you. Yeah, man, I haven't heard from you in a while, but yeah, good to see you. She's saying TG, Moxie is the best trading system in the market. So thank you. I do appreciate it. I've had a good time with it. And I think also you guys are starting to see that because got a lot of people following me and taking the classes, and I've gotten a lot of really good feedback and a lot of good compliments. So I really must say thank you to everybody who keeps buying it because I'm just here to help out, you know. Just want to make sure you guys see what I see and everything that I've learned and try to communicate that to you. Yes, Breeze. I am an end of day trader, which does mean I normally enter basically the last hour of the day. You know, kind of anywhere in there. I just kind of want to see where did price end, where did the day end, and then I can go in. Nothing too precise, just end of day. Rojans, yeah, besides the hourly 50 SMA, I have the 200 SMA, and then I have the 8 EMA and the 21 EMA. A cash, no, I don't really watch the buy orders or anything like that. So the only thing I ever look at, I think, in context to what you're saying, is I look at how the volume up and down order flow, like how many shares are being bought versus how many shares are being sold, like order flow volume, and then how many stocks are up versus how many stocks are down, and that's kind of like market internal. I correlate that against the market itself, and that kind of gives me some clues. Bruce, actually, I don't know. I've never looked at Moxie on options charting. I don't know, but that kind of seems interesting because, chart's a chart. And I think that we all do, supply and demand. So maybe if you put Moxie on an option chart and see if it works, yeah, maybe. I've just never looked at it that way. I don't really do options, so yeah, I never do that. Chris, I don't really play the short side, other than the last 2 weeks, this market has been going up, so I'm not too interested in the short side. Yeah, it can be fun real quick, but it's also a different character, and sometimes, I don't know, I just don't really like to trade the short side. I can teach it all day long, and I'm very good about it. Like, I'll show you, if you look here, the S&P, I was guiding all my subscribers and everybody. I said, hey, this is an inverse trampoline move. This is price over the 50, the Moxie indicator below zero. It should not be there. And I said, if you guys are interested in taking short, we talked about UVXY, we talked about SPXS, we talked about SQQQ as ways that you could do it, or you just buy puts or something, or you sell credit spread, call credit spreads up there, anything like that. And this thing worked out just like a dream. And I even gave a target of 372, and it went right to it. So anybody who follows me and sees my live stuff, you like who are Moxie members, you guys know I was 100% right about this, which, as I said, I don't usually do targets, and man, that thing sure worked. So, and I even told people, like, after Powell spoke and the market just went straight down for that afternoon or that morning, I said, you guys better pay yourself. Like, the market doesn't, we've already been going down a lot. You look at a lot of the names and tickers out there, and they are just getting just ripped down. I said, I don't know how much further this can go. And the market did just hit the level that I'm looking at, and that was a straight down move in one day or in just a couple hours. I said, you guys better be careful, and if you're short, pay yourself. And that was the perfect thing to do, and I hope everybody listened to me and captured the gains that they had. Yeah, Tom. Yes, shameless plug. Yes, I will be live again on Wednesday. We have the YouTube and Facebook and Periscope live Wednesday at 10:30 Central. So we sure do that. Joel, I have it. I have the Moxie indicator calibrated for the 15, so it will work on the 30, but I don't have it calibrated, so I can't really tell you what it's going to do. All right. The precision that I have figured out that works is on the 15-minute time frame. Be my guest, put it on a 30, but I don't have rules for you in that case, so you'll have to just kind of see what it's going to do. Okay, I think we're wrapping up here. Yeah, Quinn, thanks. Yeah, that was an eerily accurate outlook on SPY. Thank you. Yeah. So the dotted lines on the hourly and the daily, these are Keltner channels. I think right through here, those are Keltner channels. And so John Carter refers to it as the ATRs, average true range. And it gives me an idea of kind of the extent to where price wants to move to the upside and to the downside. It is one of the best additions that I've put on my charts ever since I got to Simpler. So I got to thank John Carter for that, and it really complemented my style of trading and really helped give me the other side of what I needed for knowing when to actually sell, take profits on something. So very, very good like that. Yeah, Roshan, good. Been learning so much for free. Thanks. Yep, you're welcome. We're trying to put stuff out there. I don't want to give away the farm or anything, of course. We need to make sure that people who are paying actually get value. But I also want to show you guys that I've been on the other side. I have been where you guys are, watching other presenters and being like, I don't know what they're talking about, and they are giving me no information. It makes me not even want to sign up for them, or I don't even know what their trading style is. Like, I don't know what I would be paying them money for. And so I feel that I like to be transparent. I like to show you guys what I do and how I do it. And I figure, like, hey, if I do it on a free platform, if you guys like what I do, you'll take the class, you'll get the indicator, like, whatever. I'm here to help you guys, really, That's what it comes down to. And we just need to be able to pay our bills while we do it. And I think that being transparent and showing you guys how I do it works out. Because trust me, I have been on your side, super frustrated, listening to hours of presentations by other people, and I'm like, I don't know what I'm getting. I don't know what am I paying you thousands of dollars for? I have no clue, because I just watched you for an hour or two and it makes no sense. So, Roshan, I don't think we have any coupons. We do have referral coupons, so if you refer somebody, you get a couple $100 for our store, stuff like that. Hey, Rebecca, you and your Gucci knife, yeah, shorting with Moxie is extremely accurate because the Moxie tells you where the trend is going next. I've never had such an easier time shorting the S&P or any other stock. So, hey, you know what? I know other people trade differently than I do, or they're willing to do things. I can teach you how to do all this stuff with my method. I just personally don't do it. So that is why I love being an educator, is because I can show you guys what you want. I can show you how you can day trade. I can show you how to short trade. I can show you how to do longer term time frames. I can show you guys all this, even if I only maybe take 20% of that, actually trade 20% of that. I kind of figured out what works for me. I trade that. I stick to a small thing, but I can show you guys and teach you a whole bunch of other stuff. And from the comments here, it sounds like you guys understand that. And I've got a lot of people vouching for me that they like what I teach, and then they can go apply my lessons and do it to their own kind of trading, their own style. So yeah, Rebecca, with your Gucci knife, getting in there and just like slicing and dicing on the lower time frames, it's pretty good. Steve, no, Moxie does not work with TradeStation. It will never work with TradeStation. We've tried so many times. There's just something wrong with the code and how TradeStation operates. It's just not going to work. So it's kind of a bummer. But we do have some big news coming up. We are getting Moxie on a couple other platforms. And so I know some people who are in other countries who can't get Thinkorswim. We have an answer for you. It's coming out soon. And we do have a couple platforms that Moxie will be on. So this is really great. All right, let's wrap that up. It's been 55 minutes. I hope you guys have had a good time with it. And you know what? Let's always just kind of be nice here. We're here to help. Keep the comments nice. Be polite. We're here to help each other. No sense being mean. Be a good person out there. And other than that, appreciate everybody else who's here and having a good time. And I'll see the rest of you Moxie people tomorrow, and we'll see what kind of other money we can put into the market and where we can go. And everyone else, thanks again. I'll be catching you the next time I do this, and then I'll see you again on Wednesday when I do the Facebook and YouTube Live. So until then, thank you, everybody.